I can. Sorry, brother Ala.
Yes.
I can tweak that question a little bit and say, how can I know that I am ready to get home? And then I think I have a little bit to add on that piece.
Okay.
If you give me some time.
Please go ahead.
Then is that okay?
Yes. Yeah. Please.
Okay. Then the question always will be, yes, like, am I ready to buy a home? I think that's the first question.
Okay.
And that's I think we need to do or answer it before going further in the process. And that's if me going to buy a home. The first thing I should ask myself, am I willing to commit for a 10-year commitment without mortgage or financing this home for coming 10 years? I'm living here. Does it work for me? Does it work for my family? Does it work for my kids in this neighborhood? Does it work for my traveling? If that's been answered and everything checked out, then you are ready to buy a home in a certain area, or you're ready to commit to pay down your home in coming years. Then first thing you need to look at is say, if you're willing to buy a home, that means at that point now you are renter, you're renting a home. Then I'll try to explain it from a math side or a side, and I'll take emotion away from answering this question. We all love the home, and that's the piece. Then the first should answer, asking myself to rent a home or to buy. And the true question you're trying to solve, which will make you better with using your money, to pay a rent or to buy a home and consume that home and save some money on a side. To start digging on this question or this small analysis, you need to look at comparable. You need to compare how much I'm buying, how much I'm renting my home for today. I'm living in a neighborhood or a place, how much I'm renting that home. And then look to my wish list home. Then once it's come and we start talking about buying a home, what truly happened, you have a big wish list that hidden somewhere. And if you're married like me, you have a longer wish list that you need to fulfill in the new home. And then you look to buying that home that have a long wish list and it have all the feature. Your kids will love it. There's a room for everyone, nice neighborhood, nice school. And look at the price. I say, okay, that price is X, and how much I'm paying to rent a similar home of the one I'm trying to buy. Do not try to compare it with the current rental. And the reason why, because the rental home that you have today or the home that you're renting today, you can accept some deficiencies, lower feature, but when it comes to buying a home, you need a lot of features that you want to see it in your home. And to make it apple to apple, you need to make it fair comparable by comparing renting. That's your cost that you're losing every month. I don't want to say use it, but that the cost or the money amount that you consume every month compared to your finance cost and property tax cost. And if buying a home without looking to the full mortgage payment, just looking for how much it costs you on finance, which is interest or murabaha, musharaka, whatever you call it, it's the money that's not going to your pocket or not in the principal. In top of that, you add the property tax.
Just to clarify, so principal when you say principal, that is the price of the house.
It's not true. I'm trying to say the payment you do for such buying a home. Then if you want to buy a home, there's a monthly payment you will pay.
Yeah.
And that payment, which is out of my bank account, it will be it will have two sides. One piece of it will be the interest or the cost of that finance. The second piece, it's how much money you pay towards your home that you bought. And if you bought a home for 100,000,
yeah,
and you finance that home, and let's say your payment is 1,000 a month, that 1,000 will include two pieces or two parts. The part one will be the interest rate or the finance cost or the murabaha cost, and the other one is the other side will be the principal saving money that you pay towards your 100,000 loan. And over the time, you try to pay that 100 and acquire your home in full. Does it make sense?
Yes.
I see you're a bit confused.
No, I just want to clarify when you use the term principle. I just wanted to make sure that that term is clear. It wasn't clear to me.
Okay.
Yeah, keep going.
Okay. So the minute you know how much it will cost you or how much you will pay for interest and a property tax on buying your home, the home that you wish to buy, then you want to compare it to the similar rental for the home you're willing to buy. You cannot compare it with your current home. And then you will see that it should be straightforward. If buying a home, it will cost me, allow me to use interest and property tax, a monthly of, let's say, 1,700. And if I'm renting, or I can rent the similar home for 2,500, I should be better off by buying a home.
Okay.
That's the way I look at it.
Okay. So it seems that there is, based on my finances and what I'm willing to do, there is a kind of a cutoff threshold above which I'm better off staying in a rented property, below which I'm better off getting a house, buying a house. After that, I will start going to the losing side.
It's true. It's either you're in favor side or in a losing side. There's a break-even amount, and that amount, it will be, I'll use it again, the interest price or the interest cost or any sort of finance cost, plus the property tax on a monthly basis, compared to renting a similar home. And you will see where you are, which one weighted more, and you will take that decision on the money side.
Okay.
Now that's the math side behind it. But truly, you also have a commitment piece on the same decision. And that the commitment that, are you willing to commit for this home for coming 10 years? And I'll always use 10 years at a minimum, because buying a home, it's a long-term move. It's one of the biggest decisions. Then you have to be ready to hold on that home for a little bit longer. You're not trying to bid on the home. You're not trying to play the prices. You're trying to stay in that home and to have it for a little bit longer time, maybe retirement time.
Okay. Brother Nazir, Jazakallah khair for the question. It is coming in the flow of the session, so I don't want to jump ahead that and bring this point to the discussion. We will touch that soon, inshallah. So back to the point, and as we're basically going through the journey from the beginning up until the closing and someone moves into a new home, you touch upon the credit score and your ability to get a mortgage and what's the interest rate in there. Can you elaborate more about what is the cutoff threshold there? Where need the credit score be? And then follow up about the minimum payment concept?
Yeah. Then I think those will be your checklist points that you need to check on what things you need to do or anyone need to do before he know that he's ready to buy the home, to get that commitment. After he loved the area, he made his mind, he loved the place, he's committed to stay in this neighborhood for 10 years. Now we have a checklist to go through. The first one will be your credit score. A credit score, it's in a straightforward way, it's a score for your credit history and how's you behaving with money based on lending. It does not include your any other investment saving. Then it's truly lenders look to you how you pay your bills and how you manage previous finances, either credit cards, loan, and all of that stuff. There's you'll need to know your credit score before you start shopping for a home. Before you do anything, you'll need to know your credit score. You'll need to know that your credit report on a good shape too. The good practice here to have your credit report through one of your banks. Most of the banks give it to you if you ask for. Some banks provide it nowadays on a website. Take a look at your credit report. You are qualified to ask for a physical copy credit report from the two companies that monitor us, Equifax or the other company. You can ask for it. You can send a letter and they have to mail it to you. Take a look to your credit report. Yes. And it's a free, there's no charge for it if they meet you. It's once a year. You can ask for a credit report, you read it, you go through it. Look at the items and make sure everything there it's for you. There's no any mistakes or error. It's happened. And then tips that I will say on your credit report, you want to make sure that all your bills and utility bills be paid for last 6 months at least before start looking for a home, because that will boost your credit score. You need to know that your credit card outstanding balance in all your credit card, in all of them combined, it's less than 30% of your limit. Then if I have two credit cards and the joint limit is 1,000, I should not have an outstanding more than 300. I should carry the same behavior for 3 months at least. You need to count your loan monthly payment and any line of credit, student loans, any type of other stream of cash flow that you pay out, and it's fixed. Then car loan, lease, car loan, lease, line of credit, if there's a fixed payment, and personal loan and student loan. Those things you need to count it on. You need to line. Sometimes it can be you paid your loan and still it's showing on your credit report. Then you need to make sure it's clear. You have a clearance from that company. Once you see your credit score, I think the cutoff credit score that you're looking for, it's above 680. Most of the major banks here in Canada, they will give you a preferred rate. You'll get the maximum discount. They won't add any premium if you have an excellent credit score, which is above 680. If less than 680, and I'll talk on major banks, and it could be a different creditor have different views, but you will be charged a premium, and that premium can be either fixed a premium to get the deal, or it can be a percentage added to your rate or to any kind of profit sharing there. Then you want to make sure that you are in good shape on your credit score. Definitely, if you go to like if you and your wife buy a home, make sure she's also having good credit score. Try to take a look there and find dig more and make sure that it's in good shape.
Okay.
Then after looking to your credit score, I think you can do the second step will be, now you know that you have a good history on you paying your debt. you can take a look and see, okay, what type of home I'm willing to buy. And that's kind of the second step. By looking, am I going to buy a new home, a brand new from the developer that will be constructed, or a second market home, something that exists in the market and I'm taking over the ownership?
Yeah, that's
Should I go through?
that's an excellent point to move on. Now, assuming all the credit score and the finances are in place, there's two dimensions to this, to the next point, which is used versus new and small versus big. I mean, as a family of 5 or 6, a townhome is an option at a stage in life, but then a single home will be the more appropriate option. So can you address those two dimensions? The first one is being new versus used, and the second one is going small, then big, or just going big all the way.
Good. Then I'll start with the new, which is market home or second home from the market. There's different criteria for both. There's pros and cons on each side, and truly you need to look at your benefit. If you want to buy a new home, one of the things you need to consider, it takes time to deliver this property. The time length is one of the things you need to accept, which now in Ottawa take between 1 to 2 years to deliver this home, to deliver your new home.
Yeah.
The good piece about buying a new home, you're getting a home that have all your wish list, the best color, whatever you like to see in your home, all the pictures, everything you're looking for can be delivered in a brand new home. Now, with buying a new home too, you have to consider that you're buying a new home, a new roof, a new walls, a new flooring. Then this items can be used for a little bit more without any wear and tear, or they get replaced. Then you're kind of buying a coverage for coming 10 years. That's the average for most of the item in the home. If you want to look to buying a market home, this market home can be favorable for families who's looking for a certain neighborhood. It's maybe for someone who need to close the home in a short period of time, sometimes 1 month, 2 months, 3 months. You can have different terms on a closing, but most time the average is 2 months here in Canada. You can pick the school where you belong, because you know the neighborhood. Then you can know the postal code. You can know where your kid's going to school. You can pick your area. If you are near a masjid or near to work, it's your call. And it can give you most benefit in choosing the area. It can give you one big benefit. You can look around the home before putting an offer, correct? I go in the home, go every room, check every corner, look at every light, and look to the basement. My neighbors, I know them. I know the area. I know everything. I know more details than that community when I buy a market home. And I'll say some people love to buy a home. Some people love to buy a market home. It's decision you make. But there's pros and cons in two pieces on both sides.
So just let me focus a bit on the finances. The down payment, the amount of the down payment, is it high? Is it the same for both options?
Oh, that's a good question. Then I would say yes. And the way I'll answer it, for the financer, which is the bank or credit union or anyone who's lending the money or you borrowing from, they look to the home as a full price, and they ask the minimum down payment of 5%. Then if you're buying a brand new home or if you're buying a market home, the minimum down payment that most of the major banks accept is 5%. Now you can go higher in your down payment or lower. It depends on your finance and your business.
Okay.
But
Now,
in theory, both of them will accept the same down payment.
okay.
When you buy a new home, the way you pay it, it's different. Then, brother, if you willing a new home, technically you don't need to pay the 5% upfront. It's pays you need to pay it over the term, over the delivery, or over the first year. Then they will divide it for you. You'll pay 5,000, then 10, then 20, but you will be in a neighborhood to pay a certain amount, which is either 5% or less before getting the home ready, and then you come up on the completion. You come up with the remaining 5%, and the financier will give you the maximum loan. It's 95% of your property. Where if you buy a market home, it will be you pay 5%. That's the minimum you need to pay down, and then the 95 will come from a major bank.
Okay, so I see there is an advantage if I'm putting a down payment for a house through Minto that I will receive in say 18 months, then I will have to manage my down payment to complete it basically over 12 months or 13 or 14 months. That's what you're saying.
Yes, and there's a second advantage attached to it. Now, it could be advantage, it could be disadvantage. And if from your point of view, yes, it's true. Yeah, especially that I can pay in pieces, then I know whatever I saved won't go one time out of my bank account. Definitely, there is one thing. It's an advantage on the home prices. Then when you buy a home today that will be delivered 2 years from now, a new developed home, the expectation that this home will go higher in the price.
Yes.
Then you kind of you seal today market price for this home, but you closing on a certain date later,
in the future,
then you will be more in favorable on the price movement. Then you will be
Okay.
more in the home, correct?
Okay.
Then your 5% today will be more in percentage in the future on closing.
Yes. So
Yes.
is it fair, based on that, to conclude that there will be more demand on new development rather than on market houses?
No, I don't think this is true. The reason why people are demand to buy homes, but the new developer, they are not in control of the supply. Usually they have a certain percentage of development they can develop every year. Then let's say a developer Minto you mentioned, let's say Minto have a big land, 75 acre. He cannot start developing the full 75.
Okay.
He with a percentage because that's the zoning they get, and this is how he keep developing. Then you always have a demand in both sides.
Okay. So, Brother Nazir, does that answer your question?
Yes, it does. Thank you.
Okay. Jazakallah khair. Okay. Okay. So that's for the old versus new. What about the size of the house?
Oh, that's a good one. Then the two theory hold right. Then there's one theory talk about let me just buy in the home that suit my need today for a small family, young kids, and let me save some money, get some appreciation on the home price, and over the 5 years, 10 years, now I save some lump sum. The home price went a little bit higher. Now I have a bigger down payment or bigger money to take in and buy a bigger home.
Okay.
This theory in all motivation on this side by thinking that home prices will go up. That's one. And you are saving when you buy this home. There's a portion of your pay goes towards the principal, and you have a saving plan attached, which means you'll pay whatever you pay, you're paying less than whatever you rent today, and that pay, maybe half of it or more, goes towards the principal of your home or goes in the home value. Then you're not losing it.
Okay.
Yes, I think that's the argument on this side. Uh, the average Canadian move 3 homes in their lifespan. That's a statistic of Canada.
Wow.
Yeah, and
That's including renting, or that's owned houses.
own houses, own houses.
Okay.
Own houses. Then in their earlier in 30s, they'll buy a home whenever they just work, and they'll be couple maybe. And the minute they get a kid or two, they move to a bigger home or a semi-detached or a bigger townhouse. And then later on, whenever their kids grown up, they need to split them in rooms and they have a little bit more kids, then they can buy a bigger home, detached home. That's one part of the story.
Okay.
There's another part where it tried to count for the switching cost. Then what happened if I buy a home townhouse for 100,000, and later on that 150 selling today by another home, there's a cost for this to switch from a smaller to a bigger home. Those will include your land transfer, will include your and moving costs. Then if you put those costs, which is 2 times an average of 40,000, then you need to consider that if you have a loan to move ahead 2 times in the future. That the second part will be, you say, what if I want to buy the one home that I love and I know it will work for me, my family plan, my kids to school, all of the stuff, how much it will cost? And if you do, you'll be able to buy your one-time home without switching.
The sound is cutting. We can't hear you well.
Brother Ala, better now?
Yes, looks better.
Okay, just do me for a minute. I think I'm rejoining back.
Okay. Yep.
Okay. Then I switched networks. I apologize for that.
Oh no problem. Not at all. Jazakallah khair. So that's we're in the pandemic and we haven't been working at home for so many months. So now it makes sense that someone considers buying a house in the middle of nowhere, like some rural area outside the city, and make a life there. You're homeschooling. That is a visible option for someone like you. You take the kids and move somewhere outside the city. What comes with that decision in terms of owning the house?
There's many things goes in under this decision. Then if you want to buy, then we all know buying in an urban or in a city, we understand it very easy. We know that what I only want to pay a property tax. That property tax will include all the services I get today in my area. Buying a home outside the city range, the first thing I will always think about that it does not have any water connection. I think the good example was nowadays it's KMA. Then whenever they bought a property, they don't have a drainage connection or water connection. It is a different way. Then you have a septic, you have well there's a well that you need to clean every 10 years or 15 years. You need to make sure it's a clean, it have a clean water and it have enough water for you. Then the second one, you don't have a drainage. Then you want to make sure you have a septic system in place, in a good shape, that can carry on its service your home for the coming 10 or 15 years. There's a cost for that because it will be on your bill. There is a good point. You can argue that you can get a bigger land outside the city. We all work from home, then it could be a good transition. You have more space, one office place extra for a cheaper price. I'll say that it depends on the deal. Most likely you'll find that home today worth maybe a little bit lower than a similar home in city, but it's your case. Now, one thing I consider when I bought my home, I never bought a rural home ever. I bought two homes, both was in Kenat, alhamdulillah. I always consider going for shopping, commuting, the masjid, the community, the place where I'm hanging out before the pandemic. Those are something that essential for me. I need to be close to them. Then I think buying in a city, it will be better decision for me. And even my kids, they can hang out with their friends, with their community easier in the city, not away from the city.
Okay. Okay. So let us go back to the city now. Finances are in place, but we just have one little issue, which is where exactly is the down payment coming from?
Well, that's then that's one of the major questions. While you're finishing your checklist, you have to make sure you have enough money to buy the home, the down payment, which at least you need to come up with 5% of the purchase price. 5% your deal, at least. There's many different sources for down payment. The very common one that we all know about, I save the money. I save the money in my saving account, checking account. It's ready to go. I have this much money. It's if I have 50,000, that means it's 500,000. 50,000, that can go with a 5% of your home. That's 500 home. I can qualify for based on down payment. Still, I did not check.
That's a million. That's 25,000. That's 500.
Yes, 25,000. That's the minimum to come with to buy a 500 home. That's if you qualify on income, but that's the theory. Then getting the money from your checking or saving, something you save for, that's the known option that we all understand. There's more sources you can come with the down payments from. Your TFSA could be one source that you save money. It could be your investment. You invested some money and now it's the time to cash out and take it to your home. It could be your RSP. It's come in place. If from your RSP you're eligible to take up to 35,000 and pay it back over 15 years. That's another source. If you and your wife you have each have an RSP, then that's 70,000 in maximum withdrawal you can do. You can get a gift from your family, from your father, from your mother, from anyone in your family. They can gift you the money. They just need to sign as a gift, and they are not going to ask you to pay it back. There is a new program came out 2 years ago. In end of 2018, it's the first time home buyer incentive. And I think we can shed the light on that program a little bit. It's a good program. It's kind of CMHC, which is one of the insurance company that insure mortgages here in Canada. They come with incentive to share with you your home purchase. Then they will provide you 5% of your home up to a cap of 50,000, or 10% of your buying home if that home was a new developed. Then 5% for a second home, or second market home, or 10% of your developer home, and it's 50,000 cap. They have a criteria that your income or household have to be less than 120,000. The good piece about using, there's a pros and cons too. And then I'll give you my recommendation with that. One of the things you can use this program for, if you are not qualified for taking a mortgage or borrowing money or get profit sharing murabaha help, then you can use that money to qualify. It will boost you a little bit, then you can get the amount that you're looking for to buy your home or at that price. Then let's say you are qualified to 500 using the incentive program, it can boost you a little bit to take you to 575 or 600. Then you can be favorable.
Just to clarify, that is a loan.
It is a loan. Okay. It is a loan. You either pay it after the term of 25 years, all in one shot, plus any appreciation on your home price. Then what that means, if you get a 5,000 to buy 100,000 home, which is 5%, and that home is second home, and over the 25 years your home become 200,000, then you need to pay back the 5% of the 200,000, which is 10,000 in this case. It also works the other way. If you bought a home for 100,000, you get an incentive of 5,000, and your home dropped in a price, and let's say after 10 years your home worth just 50,000, you will pay 5% of that 50,000. Then they're taking the loss with you. Then they more likely they become your partner on this home. It's kind of they have their share, and it either goes up and down. Yeah. The second way to, that's if you hold the home for 25 years, then you have to pay it on 25-year term. But let's say you bought a home, and after 5 years you decide, or you have extended your family, and now you need a bigger home, then you have to pay it on closing the home. Whenever you sold this home, you have to pay back.
So there's a timely question here about the insurance waiver for the down payment.
Yes. Then the rule for all major banks here in Canada and financer, if you pay a 20% of down payment, which is 20% of the home that you're trying to purchase or more, there is no insurance required. Now, if you pay less than 20%, which is 19.99% of the home that you're trying to buy, you need to buy an insurance. And the financer, he need to buy a default insurance from one of the major companies. CMHC is the lead on that. And that is one of the qualification you need to get. That means buying insurance to get their incentive program. Then if they're going to give you an incentive, or you apply for incentive 5% to 10%, and you buy this, it's not a free sharing. You have to buy their insurance. Usually insurance will cost you 1.5% of the home price.
And that is a one-time payment?
It's that's a good question. I say it depends. It depends. Then if you bought a home today, and you pay less than 20% down, you need to buy insurance up to the term of your mortgage. What that means? Then if let's say I bought a home for 100,000, and I put a down payment 5,000, which is now I need to buy insurance for the 95% loan. If after 10 years I decide to sell the home and buy another home with the money, but my next home, whatever I save with all the equity I have in the home, it's less than 20%, then I need to buy another insurance. I need to buy another insurance. The only way you will buy it one time, if you bought a home and you stay in that home for for 20 years, and the home price keep appreciating. Or if you bought a home, and now after 5 years or 6 or 10, whenever you sold your home, you have more than 20% down to pay for your second home.
Yeah. So
in that case, you waive it.
What I meant is that the insurance waiver payment is it divided by the payments, monthly payments or bi-weekly payments, or is this an upfront payment done at the before?
It's upfront payment.
Okay.
That you will pay it upfront, and you'll get a certificate, and that payment will be embedded in your mortgage amount. Then let's say your bank qualify you for 95,000 mortgage out of 100. You will be paying a premium on top of that for the insurance, maybe 4,000 or 5, and it will be, now you have a loan of 99,000, not 95,000 that you think you paid for.
Okay. That's very interesting details. So I'm looking at my notes here. We covered that. Okay, so we're ready for. We saw a house. We're planning to close on that house. Who do I need to be on my team, or so is it just something that I finish myself, or do I need to consult an inspector, maybe have some legal support somewhere? Who's my team?
Okay, it's a very good question. Actually, there is a team that will help you to close it. There is some of them, they have to be on each deal. That means you must team up with someone to close it, and others which optional. You can either use them or you can do it yourself. It's up to you. Then I'll start with the main three. You need truly 4 different partners with you or parties in this deal. You need a lawyer, and that's must.
Okay.
That must. Now, in certain situation, you can close without a lawyer, but there's a lot of legal signing you need to do, and you need to understand this contract. Then again, if you're dealing with one of the major banks, they won't accept you closing your deal. Then you need to deal with a lawyer that register, and that lawyer have to be the trustee person in the deal.
Okay.
Then you need a lawyer. That's mostly the first person you need to shop for, and you want to make sure that he's ready for your deal and he's working in your favor. Then the cost of lawyer, I just will put that cost. The cost nowadays in Ottawa, it's between 900 till 2,000, depend. That's a regular deal that you're buying. Then you need to count for that money, part of your saving whenever you decide to move on. Then there's an inspector. That's an optional.
Okay.
It's recommended to have inspector job to look around the house to find if there's something shady, something need to be repaired, a crack here or there that you cannot see. He can check the roof. He can check different things. Now, inspector job, from my point of view, it's important, it's essential. Even if you buy a new home, by the way, if you buy a brand new home from developer, inspector can look under the hood and try to find you what's missing. And since you buy a new home, then everything will be covered in the first 1 year, correct? Then you need to make sure everything in place and it's being built in the right way based on the code. He can give you a good tips.
Just to clarify, there is what he finds, what he recommends, something that still can be discussed in the deal and in the pricing, or does that happen after?
Yes and no. It depends. Okay. Then some of them, it's a major details that it has to be fixed, and it has to be up to the standard, that the building coding standard. Then yes, they will fix it. If there's a developer, they will bring it up and fix it. If there's a home or someone that you're trying to buy the home from the market, they will fix it for you. You will need to ask to someone to fix it, or you can ask for a discount. Definitely they will do. Now, that's if it's a major, brother Anna. On the other side, he can put points or tips or some recommendation for the roof age. Let's say he recommend after 3 years to take another look to make sure your roof in a good shape. That's they will not, you can't add it, I'll say, part of the deal, because it will happen later. He can give you some tips on the coding, but in this case, your pricing should include those less lifespan for these items, correct? Then if I'm buying a home with a 1 year roof that can expire or I need to change after 1 year, I should have a good value for that price or that home, because I need to consider maybe 20,000 in a year from now to fix the roof. Then my price should be adjusted to take away that. Yes.
Okay. So I don't see that being an optional. It's just like a must.
It depends, brother. Then I see in like some of us, we think we are handy or we know something, and maybe we have a good eyes. Maybe I'll say, you know what, I'll get my wife and she'll inspect the home. She have a good eyes. She pay attention to details. I don't think she will find whatever he'll find. And the reason why, the way he looked to the home is totally different than the way I look to it. And in his like field, and he's the expert to find those things that out of the emotion piece that I have in buying the home and love the home.
Yeah. That makes sense.
And that the second party.
Yes.
You need, then the third party is an optional too, is the realtor. It's not a must. You may have realtor, you may not have a realtor if you want to buy a deal, buy a home. Using realtor have a benefit, especially when you're buying. It won't cost you anything. He's taking a piece of the price. He will get paid from the seller side, but as a buyer, it won't cost me. But having a realtor, a good realtor that you can depend on, will help you in doing a couple of steps. One of them, it will help you in your homework, finding the right home in the market, correct? Then he'll look after and what options and what home and what features, what options you want to have, and he'll try to find it, the matching home that most likely will match your need. He will cover things that you may never think about it. And it's happened to me personally. Then my realtor, the person I used to buy my first home, I love a home. My wife loved it. We love the area, everything. And my realtor stopped me. And the price was great. It was less than the market. Everything was, for me, it's like done deal. And the reason what he came with, he said, you know what, Khaled, it's a grower home. That means the owner used to grow something in it, you know, the canopies which come now. Then it stopped me, and that's a good one.
So something like that, how would he do that? I mean, he's not an inspector.
He's not, but part of his licensing and questions that he need to disclose or to get a disclosure from the seller, it's kind of, he have to fulfill those disclosure, because I'm not aware about it. I will never be aware on it. Then he have to do his homework. And he's covering me. The same, he have to check if this owner own the house. There's no lien. This is the true owner. It's not the son or the father or whoever. Then he do his due diligence to make sure, yes, we are dealing with the right owner. That's an optional, but you are in favor to have a good realtor. And let me say one thing about good realtor. You need to find a realtor that understands your need, and he's willing to work with you. Then you take some time to find the best home that you're willing to buy.
Okay, so that's the third person. Is there
Yes.
a fourth one?
Yes.
Who's that?
Then we have the lawyer, we have the inspector, and we have the realtor.
Yeah.
And now you need the financer, the guy who will, he's either a mortgage advisor that work independently and try to have a commission out of the deal, or a bank mortgage advisor, or a financer, or a profit sharing agent. And he's the person who's trying to finance or come with the reminder of the money or the balance of your purchase price.
Okay. And okay, so that's also optional.
That's also optional. Now it's sorry, that's not optional, but it's optional if you wanna get independent advisor or a mortgage agent, or you wanna get someone through your trusted bank or credit union or whatever. Then you won't pay for her services. The thing, if you deal with independent advisor or agent, you need to pay for his service. He'll cut a percentage out of the deal for his benefit. You're paying him for that.
So that's a team of 5. That is a basketball team.
Yeah, and for sure you need the head of the team, the captain, which is, if you are married, it will be your wife.
And you're gonna be what? The coach outside?
You'll be, I think you'll be the guy who's paying the bills.
That's fair enough. So we have an important here question from Brother Nazir. He's saying that, what are my legal rights in the event if some misfortunate occurs immediately, say a few weeks, 2 to 3 weeks after I move in? Say, for example, a water pipe bursts. Is that seen as a previous owner's negligence, meaning not following the code, or is it something now it's 100% yours?
Okay. It depends if you're buying a new home or a second home. If you're buying a new home,
it's obvious I'm talking about a previous one, an owned one.
And a second home, then if there's a second home, most likely you don't have any rights. It's done deal. It's done deal. If anything happened from the closing date, what usually you will do as a buyer, let's say I'm buying a new home, I have the first 30 days to highlight anything to my lawyer. Then in the first 30 days, if something happened, water leak, something that just happened in the home, ruined for any reason, I'll have to let my lawyer know, and she will send an email or a request asking the previous owner to give his feedback. If the homeowner, he said, I don't know about it, when I check the home, when I give the key, everything was fine, you don't have any right. If you can prove that he knows about it, or your realtor can prove it, definitely he will pay for the fix and any damages.
Okay. So
but it's common. It's common. You will not have, like, this is very common. If there's something small and it won't cost you a lot, I think your realtor will try to let it go, and your lawyer will say, you know what, the best we can ask for it, and it's the seller responsibility if he want to take it and pay for it or not. Most of the time it's not.
Okay. So we have a follow-up question here, once again about the inspector. So the inspector inspects the home before making an offer or after making an offer?
Oh, that's a good one. Then it should be the right way to do it, or the right way to use the inspector before you make any offer. This is the right way to use it, but it's your call. Nowadays in Ottawa, because of the market, it's hot and fire. People say about the prices going up every day. There's bidding war, all of this stuff. People start doing their inspection after they put the offer. Now, this can take a higher risk, or you can be in more risk on this deal than usual. The right way to do it, you need to inspect the home before putting an offer.
Okay. Okay. So another follow-up question from Hamza, saying that for the realtor, what if the house is on the market, meaning an unused, previously owned one, and there is obviously an existing realtor for the seller at the seller side? Do you pay your own realtor, or both realtors deal with it together?
Okay, then if you are a buyer, you don't pay a penny for your realtor
At all.
The seller always carry the cost of both the realtor. The known commission is 5% of the market price. Then if a realtor, if someone sold his home for 100,000,
Yeah.
the most common cost, 5% of the deal, that goes to the realtor. That realtor, whoever sell it,
Yeah.
the seller realtor, he will share his commission with the buyer realtor.
Okay.
Then he will take 2.5 or 3 and pay the 2% to the other side, to the buyer realtor.
Okay.
But as a buyer, you're not paying a penny to your realtor.
So I'm out of everyone in my team, I'm doing this guy a favor.
It's true. It is true. And truly, you need him to be on your team. You need him to do some job, because it's the idea for him. I think he's in favor in the deal, but he have to do some work to get that money correct. Then I have to let him work a little bit and find a home, find a deal. All those research depend on him.
Okay. So speaking of money, and we're already there, I want to go to the last chapter of buying the house, which is the closing. It seems from the details that you mentioned that my down payment is only a fraction of the money that I have to have handy moving into this journey. It seems that there will be a few tens of thousands or even more that to be spent on the details. Closing the deal, transferring the land, and so on. What are the details that happen in there?
Okay. Then I will shadow the light on the closing cost first.
Mhm.
Then a closing, it's one of the period where your deal, your offer being met, and the time come to pay the full price. Then if in closing you're paying 500,000, that the purchase price, and you put 25,000 from your money, then the expectation, the 475,000 being paid through a financer.
Mhm.
What happened on the closing? It's your lawyer going to connect with you on the closing date. He's the trustee, which means he will collect your down payment. He want to make sure that he have it in hand through a draft or a payment nowadays stuff.
Yeah.
And also he need to make sure he received the financer money and put it in a trust account, not in the lawyer name. It has to be a lawyer name and in trust next to it towards your home.
Okay.
Then now you know that your lawyer get the money in full to purchase the home or close it. Then he will spend some time. It could be 6 hours, 3 hours, 4 hours. It depends what's the connection happening with the seller. And with those 3-4 hours, your lawyer doing two things. The first one, he's asking the seller to release the home. What that means, he's asking the seller bank or the owner to move his home out of the deed. And he's also taking away any banks. If there's a mortgage on the home with the previous bank, then he's clearing those names. And then he have 3 to 4 hours to add your name on your registry on the deed.
Okay.
He also ensure that period. And that's a very important piece the lawyer do on a closing day. He ensure there's a cost for insurance he will collect from you to ensure the period that there is no owner or the previous owner, whenever we remove the bank or the financer, there is no lien goes to the home on that day. Then he makes sure the deal is good to go and it will be closed on the same day or the following day. The minute he get the deed and he get confirmation that your name and your spouse name is there, if there's joint, he will give you a call and say, come collect your key. And most likely you'll get your key and you'll be so excited to move, and a lot of things would happen that day.
You're going to be spending a lot that day.
You will actually. The minute you have that closing, it could be a spending journey. I say it's not only one day; it's going forward. Then you need to do some finance and some money counting to make sure you are in good favor or in good shape by closing this one.
One term that you used a couple of times referring to the market in Ottawa is the bidding wars.
Oh yeah.
What is that?
Then this is a market situation we're living now for last 2 years, and it's getting more heat this year. It's happened when there's a shortage of supply of home. There's not enough home in the market, either from the developer that start building or from the seller that willing to move out and keep that space for someone else. There's a shortage between the demand and the supply. In economy, we know when supply is low, demand is high, those demander or buyer, they try to go on auction bidding. They try to pay a little bit more than the asking price to get that deal to their favor.
Okay.
Then you will see a home that going to the market and there's 10 people willing to buy beyond, or 5 or 3 that's going beyond the price and try to bid to win that home.
Okay. So there's some of the questions here are about the halal financing, the halal option. That topic has been covered in a previous session, so I'm just trying to find the link for that. Probably you can find it on YouTube under KMA. KMA has a channel there, so that will be there, inshallah. Let me look at my notes here. And going back to where we all started at the beginning, this is a route that we were talking about while considering the halal option and the fatwa that you can buy it here because you need it in the West, and there is much of halal options in big terms. You get the house, you know this is interest, so you want to move as quickly out of this. You don't want to just walk through the journey 25 years. You want to make a plan to finish it as fast as you can. How visible is that? How to plan for that?
Then, brother, it's a plan. Looking to buy a home and you now own one with a piece of mortgage attached to it. This is one of the biggest loans you ever signed for. This is one of the biggest commitment to pay back, even if it is halal or none. Whoever lend you the money, you promise them to pay back. Okay, then if you are good in your plan, you should pay your 25 amortization, which is the term that you get approved on. You should pay truly less than 17 years. If you are just doing just little bit tweaks on your payments, that should be your average pay down. Now, the story of the mortgage, you're in favor to pay it as fast as possible. You are always in favor to pay down this mortgage because you don't need interest, just keep compounding and you burn more money. But looking to the number, you pay most of your interest, around 40% of the 25-year interest in the first 5 years. The rest, 20 years, which is the normal term, you pay 60% of the interest. Then if you want to be smart on paying down your mortgage, you want to make sure whenever you plan to buy a house and moving forward with that step, you want to make sure in the first 5 years you put more to your home and try to pay down your loan or mortgage. And the reason why, because you don't need to pay a lot of interest or cost of finance on that home. Then there's many ways you can do to pay that deal, to pay down that mortgage. The first thing you need to know before start paying that mortgage, actually before you sign, you should know how much you can pay down every year without any penalty. Then let me go one step back and say, when banks or any major bank or financer too, he pay you this money or that mortgage amount, he's expecting you to pay it on the 25-year term. And the reason he picked that, because he will make money on this deal. Then if you're willing to pay it in less terms, you cannot come in next year and say, hey, I want to pay my full mortgage. Now I have the full money. Let me pay it down. And he'll give you the clearance. He will penalize you. You will pay him part of the future interest that he will count on today's days. Then, the rule you sign on major banks is called 2020. That's the major rule most of major financiers have to follow. What that means, you are eligible to pay 20% of your mortgage amount every year without a penalty. Then if you took a mortgage for 100,000, you are eligible to pay 20,000 down every year without any penalty. If you pay 21,000, you will pay a penalty for that extra 1,000. You will be penalized, yes, and you will be penalized, yes, through the financer, because for the financer, he's in favor to keep the 25 years. For you, you should shorten that period without penalty. Now, going back to this rule, sometimes it's 15% or 20. It depends on your bank and the rate. Then you need to look at those documents whenever you sign it or before signing or at the lawyer, and you can ask the question, say, what's my penalty for advance payment? The minute you know your percentage, now you need to do some planning to say how much I can pay down on my mortgage and how much I'm saving on interest whenever I pay it down. There's some steps you do that cost you no extra cash flow out of your pocket, but it will help you to shorten the term from 20 to 25 to 20 years. The first way, you can change your payment from a monthly pay. Let's say you're paying monthly 1,000. You need to change it to bi-weekly. That's the first step. It won't cost you a single penny. On your pay, it will take out of your bank account 500, which is half of the 1,000 monthly. But on accounting way, when I look to the calendar, I'll see there's a 26 bi-weekly payments compared to 12 months in a year. Then technically you're paying half a payment every year with going this route.
Okay.
Doing this changes, just change it to bi-weekly. Now you shorten the 25-year mortgage to 23-year. But if you add on that bi-weekly payment, if you add 1%, and that's kind of a payment you can choose from any major financial, it's called accelerated bi-weekly. Now you brought the 25-year to 19-year. You shorten 6 years.
Wow.
Yeah, and then what you can do next that you can round up the money. What that means, if my accelerated bi-weekly was $525, I may need to make it $550. That 25 will make a huge difference over the 20 years. That will bring my mortgage to 18 years, roughly. And now we can add on, you can have some tax credit. Whenever you do your RSP contribution, you get some money back on tax season, which is due soon. You can add those 5,000, 7,000 back, 2,000. You can, that will help you to pay down faster your mortgage, correct? Now you can add on, if you have more saving, you get some money and you don't need it, you can put it in the home.
Yeah.
And pay down your mortgage as long as you are with the right parameter of 15 or 20% without penalty.
Okay, Jazakallah khair. So we're 9 minutes to 10.
Wow.
So I will start asking questions here. I will open the floor for our guests to ask their questions. If they like, they can just open their mic and ask. But I will have to start with Brother Nazir's question, which is about the change of ownership or transfer of ownership to next of kin or any family member. Is it a similar transaction like selling and buying, and what is the cost of that?
It depends who's that family. Then, and it depends how you bought it in the first one. I'm assuming the question on a residential home, it's not investment home.
Yes.
That I bought it. It's my own home now, and now I'm giving that home to someone in my family extent. If that's the question, yes, you can give it to your spouse.
Brother Nazir, the question is to you. Feel free to answer.
I think he said yes.
Okay.
Then, if that's the case, then you need to look at that family member. If you're giving this to your spouse, and she's still your spouse, and you have a same household, you tax together, then it won't cost you any addition or any gains whenever you transfer it.
But she's sorry for interrupting, but she's already signed on the ownership, right?
Yes, Brother Ala. It depends. Okay. Now she can be joint owner on the deal, which means your name and her name on the deal, on the title deed, or she can be consenting spouse. That means your name appear, but she's approving you to take money on the home and buying this. If she's consenting and you want to bring her back to joint or give her the full home, there's no problem if you are in married relationship or common law. There's no issue.
Okay, so what happens in the case of inheritance?
That's a good one. Then, if there's not a spouse, you need to know how much that inheritance would be. Then, let's say my father passed away, and now I'm taking his full home. That's a taxable income. That's a taxable inheritance that I have to pay for.
You pay the tax for?
Yes, I pay the tax for the home. The home. Think about it.
Okay.
Think about it this way. Let's say my father, he bought his home 100,000, and now I don't have a mother that she can take over this ownership. Then, if he passed and he's passing this home to me, I'm the beneficiary. I'm taking this as inheritance. Then, if it cost him 100,000 and today it's worth 200. The difference is 100,000 inheritance. That will be a taxable inheritance you have to pay taxes on.
Okay.
Now there's another part, and the reason why I asked Brother Nazir to clarify. Sometimes we use our family member to qualify us for mortgage. What that means? Let's say I want to buy a home. I'm ready. Everything in line. I have the down payment or not, all of the stuff. But my father or mother is helping me to get approval from a bank or a financer. They need the extra income and I don't have it. Then I'm using my father to be a joint owner. It's very tricky, but here the best recommendation. You need to make sure for the bank, they need to see your father or mother, whoever co-signed joining you, signing with you as an ownership, joint owner, they need to see his name on the title deed.
Mm.
Then you need to add his name as a joint owner, but at the lawyer, you need to sign that he owned 1% or less of the home.
Okay.
And if you do that later on, if the home went to 1 million, you bought it for 100,000, went to 1 million. Now that growth will be covered at a very low taxes for him because he'll not be resident in this home. It will be my home that I'm not eligible. I'm not paying taxes on any growth or profits.
Okay. Before we move to any following question, I just want to remind everyone here about next week's exciting session held by Dr. Ashfaq Ahmed. It is going to be about the coronavirus vaccines.
Yeah.
I know that he is putting together a panel of experts, all doctors, mashallah, medical doctors, experts in the field with so many years of expertise in that. I heard some names there, but they're not finalized. So that's going to be an exciting session, inshallah, next week, and a very timely one indeed. Any more questions to Brother Khaled? Okay, no more questions. So we still have a couple of more minutes before we let you.
I'll give you a recommendation in those minutes if you allow me for that.
There is a question. So Brother Muhammad says, I would like to know more about a donation that comes from a parent from France, and if we have to pay taxes on it. That's not 100% related to this unless that payment is going to be used for as a down payment, maybe. But the question is about paying the tax. So
I will say maybe it's a gift, not a donation.
Well, the question says donation, but yeah, that's, I think, yes, it's a gift. Yeah.
It's very tricky, Brother Ala, because everyone have a different tax story. But most likely, if it is a gift, you don't need to pay anything.
No tax.
No tax.
Okay.
Then, and you can get a gift for whatever money. Then truly, if I'm buying a home for $1 million, and my father in a certain country, he is willing to give me the full 1 million, I should not be taxed. If I can prove it, it's a gift.
Okay, so I think that the question now becomes of, okay, they sent you a text message and they said we're sending you money. Who knows whether this is a gift? It's your word. And it's a lot of money. So
then at the bank side, the financer, you need to sign a document. The gifter, he'll need to sign a letter or a kind of document that say that this money which I'm giving to my son, it's a gift, and I'm not going to ask him back to pay it over time or after 10 years.
And that's in the country of the origin where the money came from.
Financer have to collect it here. What that means, if you taking this money through TD, I'm just giving example. Then let's say I'm expecting 100,000 from my father in a certain country, and he's sending this to my account in TD or BMO or whatever. Whoever doing the mortgage, he will ask the gifter to sign this letter to clear it up.
The gifter,
which is my father, my family.
Yes.
Whoever giving me the money, he have to sign it. It's not me. I'm just taking that gift letter and presenting it to the financer to make sure that I'm good on the down payment.
Okay, so it's like it has to be clear language that it is a gift. It's nothing else.
Yes, it is a gift. And it's a gift with waiver that he's not, you are not liable to pay it back at any terms at any time in the future. That's exactly what the gift says.
Okay, excellent. Jazakallah khair. Okay, so if we don't have any more questions, no more questions, I guess. Jazakallah khair, Brother Khaled. That's a lot of information. I had hard time putting together those questions and managing them, you helped with that. That's very useful information coming from someone who knows his numbers pretty well. Once again, I would say that you would have made a really good engineer if you want to consider other careers.
Inshallah.
Maybe in another life.
Inshallah.
But we'll stop here, inshallah, and hopefully everyone is staying safe in the lockdown, you and your families, and looking towards the day where we'll have those sessions, inshallah, at our KMA Musalla. Until then, please all be safe. سبحانك اللهم وبحمدك أشهد أن لا إله إلا أنت أستغفرك وأتوب إليك. السلام عليكم.
Assalamu alaikum. Thank you very much. Jazakallah khair.
وإياكم.